Welcome to the Hayley Eich podcast. In today's episode, I speak to Emir. He gives us insights into how he selects his stocks for his portfolio, what so-called mafia companies are, and he also shares with us how he carries out his valuation models. In particular, he shows us his Tesla valuation, and we cover much, much more. I really do think this is a valuable conversation, and I hope you enjoy. Welcome, Emir, to the podcast. Thank you so much for joining me. I'm excited about our conversation today. And like we were just speaking about, who knows if I've even said your name correctly there, because you just told me that you don't know yourself.
Yeah,
But
thank you for
welcome.
having me.
It's great. Right, let's start with, just so the viewers know when they're listening or watching, what's in your portfolio? Because I don't actually know that much about your investing style. I do think I know that you're bullish on Palantir, PayPal, and I think you have some Tesla as well. But fill me in. Let me know what your portfolio is like.
Yeah, my portfolio is like really stagnant. I'm lucky if I find one or two ideas per year because my investment process is heavily based on valuing companies. And to do
Mm-hmm.
that, you have to understand the story. You have to compile a lot of data and put in a lot of hours. I think I average around 100 to 120 hours before I even can make a decision. So
Mm-hmm.
there's not a lot of movement, but I like to invest in what I call mafia companies. I don't know if you heard that term on Twitter before. Like me and Arnie like to.
Mm-hmm.
I know you had Arnie on
Yeah,
prior.
I haven't
Uh,
heard of mafia companies. I've heard of asymmetric investments, which Arnie speaks about a lot. But I wanted to ask you, like, tell me what a mafia company is in your words.
yeah, in short, a mafia company to me is a business which is really difficult to disrupt, and more
Mm-hmm.
or less your only option is to use them. Meaning they have a wide moat, they're high quality, and sometimes oppressive. Like I will
Mm-hmm.
give you an example. Have you heard of the company FICO, Fair Isaac, the
No, I
credit rating
was going to say,
agency
is it
in
a
the US?
banking related finance company? But I don't really know
Yeah, like
anything.
when you want to take out credit in the US, they check your
Mhm.
FICO score. Like
Oh,
for,
okay.
for
Mhm.
example, both consumers, countries, and companies.
Mhm.
And this company, like even if a competitor were to offer their services for free, like if there was a competitor that would offer it for free, they would still go with FICO because of the interest rate implications of the loan. Like that
Right.
kind of company where it's like
Mhm.
you're more or less forced to use them. And toll booth companies fall under that. So think FICO, think Moody's, S&P
Mhm.
Global, Visa, MasterCard, companies like that where there are natural monopolies. And what I mean by that is that people use them because they want to rather than being forced to. So Microsoft, for example, they offer a suite of products. And once you're
Mhm.
on that suite, if they release something new that might compete with a different product that you're interested in, you're kind of shoehorned into using Microsoft, even though you might not want to. So that's not
Mhm.
a natural monopoly. That's like there's
Like
a huge
forced.
risk of being disrupted, right? So
Yeah.
the kind of mafia company is they are oppressive in that you more or less have to use them, but it's more of a natural monopoly. So I can quickly show you what that means in terms of financials and why it's so attractive to me. So think I'm sharing a screen here.
Go for it. Yeah. Let me add it.
So this is FICO's business. They do scores, as we just talked about. A majority of their revenue is from scores, and they have a part in software. So these are operating margins, so not
Mhm.
gross profit margins. These are operating margins, and they steadily around 88 to 90%. Like that's
Mm.
completely insane to anyone that understands. Like basically,
Yeah.
you have no expenditures to get this money. Like almost everything is pure net profit, so it's really really strong. And then they have their software business, which is smaller, which has grown from 12% in
Yeah. It's so
operating
impressive.
margins in 2021 up to 33. And if you know, maybe you don't track these kind of metrics a lot, but for people that do, like the top SaaS companies, like the highest quality software businesses, they have operating margins like this. Like this
Mhm.
is really insane. So that's the kind of oppressive company that I'm interested in. So I think FICO, Palantir is one that I think
Mhm.
qualifies as a mafia. I am interested in Tesla and PayPal. I wouldn't say that those are pure mafia plays, but a lot of toll booth companies, like credit rating agencies and stuff like that, is what really interests me. There's one huge issue with them, though. Uh, maybe I can show this.
Yeah,
If
what's
I
the
pull up,
issue? I wanna know. They sound
okay,
good so far.
yeah, everything sounds good if you look at the financials, but there's one major problem with this kind of company, and
A
I'm
major
gonna,
problem across all mafia companies or
yeah,
just yeah,
more
okay.
or less, they all have the same problem, and I'm sharing my screen here. This is
Yeah.
a chart of FICO.
Oh, wow.
It's never cheap.
Yeah,
These
wow.
only go up. Like you rarely get an opportunity to buy them, which is lucky for me. I am not a portfolio manager.
Mhm.
I don't have to answer to clients. So my investment horizon is my lifetime. So I'm happy to wait. And yeah, more or less every mafia company is always trading very expensive. You very
Mhm.
rarely get an opportunity to buy them, but that's not a issue for me per se. For example, I recently bought Tesla. I've been tracking Tesla for many years, and I lost count how many times people told me, you missed out on Tesla, you're never gonna be able to own a company like Tesla if you only care about valuation. I'm like, don't worry about me. Like, more, you always get opportunities if you're
Mhm.
patient enough, and I don't mind be patient. I don't have a client to answer to, where I have to put up performance today. Like, I'm
Mhm.
happy being patient, and that's kind of required when you're interested in this type of company.
Yeah, and I think that's probably something that we have as something on our side, as opposed to portfolio managers and people that do manage other people's money. But so it sounds. Would it be a fair assumption to say that your portfolio is primarily consisting of financial based companies and then technology companies? It kind of sounds like
Yes,
that.
yes.
Okay.
These companies are often within the finance space, so like
Hmm.
FICO, Moody's, S&P Global, Visa, Mastercard, or technology.
Okay.
So yes, mainly those two. Yeah, I'm trying to think of another example. Well, I also really like Virtu Financial. Do you know about that
Okay.
company?
No.
It's a market maker,
Okay.
uh, the only major market maker that's publicly traded, and they market make around 25% of all US stock market orders. That's also like a really difficult to do to
Mhm.
disrupt business. That's kind of unfair because even though if the market goes up, if the market goes down, they make money. As long as there is volume or volatility, they make a lot of
A
money,
strong
and
position to be in.
they have a huge dividend. They do a lot of buybacks. I recently wrote an Seeking Alpha article on it. I've also posted a lot on Twitter. So basically, all my research I do share on Twitter, on
Mhm.
X, and no one cared. Like, I think I got like 3 likes, 200, 300 views. No one cared. And since I made that post, the company's up like 90%, and they bought back like
Amazing.
5% of the shares outstanding. So there are a lot of quality businesses out there if you care to look. I think
Mhm.
most people don't really bother because my feeling is that a lot of people want to get rich quick. They don't have the
Yes.
patience to wait
Mhm.
for the right opportunity to buy based on valuation. They don't
They
have the
want the
time
next
to
big
do
thing.
valuation. Yeah, like, so there's a lot of chasing. So I think a lot of people miss out on a lot of quality businesses in the market.
Mhm. Yeah. I wanna ask you this as well. You mentioned dividends there. Do you care about dividends, or is that just something that sometimes comes along with some of your companies and, is here nor there for you? Or do you actively seek the dividend paying companies? Obviously, Palantir is not, but
Well, for the people who really like Palantir, there are investor submitted questions,
mhm.
and the
Yes,
top
I
voted
saw.
question is always like, when are the dividends coming?
When did
But
they
no,
yeah.
I really do not care about dividends per se.
Okay.
There is a reason dividends make sense in some businesses
Yeah.
when you can't really use the cash flow that you throw off. So you have two options: you either buy back shares or you offer
Hmm.
dividends as returning shareholder yield, because
Yeah.
they can't like just because a company is cheap, like take PayPal for example,
Hmm.
they can't just like make the stock go up like because they want to. Like they have to make some action or use their cash somehow, and a lot of companies can't really grow um they're then without being cash constrained. For example, we know that Palantir is such a case. Like they have a lot of cash, but they can't really just pour the cash in to grow. Like they're not
Hmm.
cash constrained. The growth isn't dependent on just pouring cash onto the fire. The same thing goes for Virtu Financial. I mean, they're not gonna gain market share or like do anything significant with their cash, so they return it to the shareholders. And one
Hmm.
method of doing that is buybacking shares or offering dividends, and they do both. So yeah.
Yeah, and we see that with some even mature technology companies, don't we? They pay a dividend. It's very small usually. It's not a very significant one, but in my opinion, I don't
Yeah,
think
it's
Palantir are
more
anywhere near
PR.
that. Yeah. Uh-huh.
No, Palantir, I don't even think they should buy back shares, even though they have
Yeah.
authorized it. They make way too much farming yields in the treasury
Hmm.
market. So it makes no sense for Palantir now, even though they have a lot of excess cash. Just pour it on and farm yield while you can. After that,
Hmm.
then the conversation can be had. Okay, how can we use this cash? They're not there yet. Um, T bonds still yield a lot, so it makes no sense for Palantir. I think a lot of companies offer like a dividend, just like a PR move, like
Right.
because people do really care about it, and I never understood why,
Mm.
especially when it's like immaterial. Like as you mentioned, like some have like this tiny 0.3% dividend yield. I'm like, what's the point? What are you offering me? Like, are there no better ways for you to use this cash?
Hmm.
Another one is that people use it to do M&A, mergers or
Hmm.
acquisitions of companies to grow artificially like that. That can also make sense, and it can also be a major red flag depending on the situation. So, yeah, how companies utilize their cash usually tells me how good of a quality company it is, like if it's high or low quality.
Yeah. So, I mean, you've already kind of mentioned a few things there, but maybe you can just sort of bullet point us a few things that you look for in companies in particular. Like, are there almost a set of rules that you must tick off in order to invest in a company? Must they have this, and this? Like, is there anything that you're quite strict on?
There is one thing that I'm like, there are exceptions to everything,
Of
but there's
course.
one thing I really try to stick to, and this might sound crazy to you and to the listeners out there. And I never want to own a consumer facing business. Do you know what I
Okay.
mean by consumer facing? Like
Yeah.
where you have to rely on customers, on
Mhm.
consumers, because I just think they're way too fickle. Let's take Celsius, for example.
Okay,
Huge
that's a good one
retail
to
stock,
take.
a lot of interest, but you're reliant on the consumer. If you're like, if the consumer's favorite influencer jumps ship and starts drinking a different brand, the
Mm.
consumer is going to follow. If there's one bad headline, like some politically incorrect statement being made somewhere by some staff, like it could ruin your brand and it's over for you. Like don't want to take on consumer risk, because I think consumer behavior is way too unpredictable. I'm more than happy to take advantage of the consumer, like
Mhm.
FICO, for example. If the economy does poorly, people are gonna have to go into debt. FICO does
Yeah.
well. If the economy is booming, expanding, people are gonna leverage, so they're gonna
Mhm.
take out credit. So they do well. So I'm more than happy to um, use the customer, like abuse them, is maybe a better way. But I don't want to rely on their behavior. I think they're way too erratic.
Mhm.
Like recently, Airbnb was pitched to me by Arnie, and I have so many problems with it. Like we've all read the tweets where, oh my god, the Airbnb owner charged me $300 because I forgot to
That's what I
throw out the
asked him.
trash.
Yeah,
Like,
I asked Arnie the same.
there's so many things that can affect your company. So one of my major rules is that I really try to stay away from the consumer facing businesses. PayPal and Tesla are kind of exceptions. PayPal, you could argue that, well, as long as they're spending, you're fine. Like
Mhm.
you don't care where they spend their money. Like you don't care what the latest trend is. As long as they're spending, you're fine. Tesla does rely on the consumer for purchasing vehicles as of the current period
Mhm.
we're in with Tesla. As we move further into the future, that might be a lesser of an issue as they move into robotics, autonomy, and licensing
Mhm.
to different companies and stuff like that. But yeah, those are my two exceptions right now. So other
Yeah, that's
than
what I was
that,
about to ask.
I really don't want to own consumer facing businesses.
Yeah, I was about to ask, well, what if there's a business that you're seeing it go somewhere else, but at the moment it's primarily consumer based? I'm thinking Tesla, but you kind of answered that. I'm guessing you're thinking further down the line, you're going to see that shift.
I think Tesla is positioned so well
Mhm.
to take advantage of something inevitable. So I can make exceptions. Like there are always exceptions to your own rules. Like if you paint yourself into a box, I mean, you're only hurting yourself. You're
Yeah.
gonna like start. I don't know the word.
Well, you're not
Like
allowing
start
yourself to
start
look
to
for
get
anything else.
delusional. Yeah. Like
Yeah.
you just paint yourself into a corner, and that's it. Like you need to
Mhm.
still keep an open mind, even though you have a investment philosophy. So yeah, Tesla is an exception because we know that there are clearly net zero goals globally.
Mhm.
We know that the EV market in particular is moving towards a certain direction. We know
Yeah.
that they are well positioned within it. That doesn't mean I'm gonna pay whatever price for Tesla. I
Mhm.
recently made yesterday actually I made a YouTube video about my Tesla valuation where I break out each business segment and how I think about it and how I value
Mhm.
it. And I mainly did it because I recently started a YouTube channel just to like sidetrack a bit.
I'm gonna have
uh,
that in the description, by the way.
yeah,
I'll have all
I,
the links so
I
people check
recently
that out.
started a YouTube channel. It's very boring. It's like 30-40 minute videos. We only look at Excel data and some charts,
That's
like
not
we
boring.
look at valuations. Yeah, a lot of
Nah,
people
us
find it
nerds
boring,
love it.
but there's a major issue I have. I was like really prepared, like, okay, I'm gonna put myself out there, I'm gonna get a lot of hate, I'm gonna have to have some thick skin. There's only positive comments. Like no one said anything negative. They're like, oh my god, I really like this, I've been missing this in the YouTube space. I'm like, what's
Mhm.
going on here? We're like, where are the negative comments? I was like, surely if I post about Tesla, it's a lose-lose situation because you're either too bullish for the bears
Yeah,
or
or too bearish for the
the
bulls.
Tesla yeah, like the Tesla fanatics will tell you that you're way too bearish with your numbers. So I
Mhm.
was like, okay, it's lose lose, but let's put it out there because I don't do YouTube to become a content creator. I do it to get pushback on my ideas, on my
I
theories,
love
on
that.
my numbers.
Yeah.
So that's also why I post on X and Seeking Alpha.
Mhm.
It's not like to get $3 from Elon or whatever. It's like I just want some pushback and to create some discussion. So if you disagree with me, please let me know and we can discuss. If you have some
Mhm.
well-grounded arguments, I
Yeah,
really
I
welcome.
mean, I think the comments will probably come. You'll get them at some point, I'm sure. But
Yeah,
I
yeah, for
think
sure.
I
Sooner or
think what
later.
you're bringing is the other side to the story that a lot of us don't bring. You're bringing the objective numbers, and I think for some people, it goes over their head and they don't really want to see that. But for a lot of people, I think it's really interesting. I think it's really valuable, and there's got to be someone in the space that does share that aspect to it. So I think you should absolutely keep going, and I think you have so much value to give, and it's exciting to see that you started posting on YouTube. But yeah, as I said, link in the description.
Thank you,
Um,
thank you.
yeah, it's good. I do want to ask you about your valuation models, but I'll come to that in a minute. I
Sure.
want to first ask you, we've mentioned PayPal a little bit. Now,
Yeah.
from what I can see, and this is just from YouTube and X and just speaking to people, some people have PayPal and they think that it's going to do well, and they think that currently it's very undervalued, and I do agree with that. I think right now we're valuing it for absolutely no growth, and that will happen. They will grow, and they
Yes.
are growing. But I do think a lot of people equally are thinking that the competition's coming, they're losing market share, which again, I don't think is the case at all. It's not going anywhere, all of this stuff. So like what do you think is so misunderstood about PayPal that you could share with us? Because I don't see that many people get excited about it.
I think every bear argument that I've come across stems from a misunderstanding. So we can
Mhm.
go through just quickly a few of them. The competition is coming. Uh, we know about Apple Pay, Adyen,
Mhm.
Stripe. These have been around for 10 years, haven't they come? And we know that
Yeah.
the PayPal has grown their free cash flow, their revenues, even their market. Like during these 10 years, all of these actors were in the market. So it's
Mhm.
not like something new. People say that, well, PayPal is an old dinosaur. They are dated. They are being taken over. Do you know that PayPal has gained market share the past 5 years?
Mhm. I do because
Most,
I looked, but
yeah, most people do not know that they actually gained market share. And like every argument, like I try to like, okay, I listen, and then I
Mhm.
try to counter argue if there is an argument to be made. So of course there are like real bear theses, like can they transition into the next gen checkout solutions, and even if they can they get the adoption that they, I don't know if you can hear some dogs barking outside, sorry.
No, all good. Your
uh,
volume.
yeah, so even if they do manage to adopt it, can they roll it out? Because we know that a
Mhm.
huge issue they have is that all their payment systems across all their existing customers, they're like on a legacy system that you can't really just bring down, because if you bring down like a web shop, that's
Mhm.
a loss of purchases from their customers, so they don't want to do that. So how do you update to the next gen? Like there are a lot of issues that they've been trying to solve for a year now. They're finally starting to roll out and scale out their new payment solutions, like I think Alex Chris is doing a great job. He's kind of no BS guy, which I
Mhm.
think PayPal has really been missing. But yeah, most of the bear arguments can be argued against. I have done that both in YouTube form, on X, on Seeking Alpha. So all my platforms, I'm like, okay, I'm just gonna throw it out there, and maybe someone will tell me how I'm wrong, if I'm
Mhm.
wrong, you know. But as you mentioned, like even if PayPal was to lose market share, if they were to like decelerate their growth, there's still a lot of market share to lose to make this valuation make sense. And
Yeah.
I make an exception for PayPal in my investment philosophy of just owning mafia companies. It's not a mafia, they're not oppressive, like you have
Mhm.
alternatives to PayPal. But I make an exception because I've never seen an opportunity like this in the market ever. I've
In terms of
never,
undervalued.
yeah,
Mhm.
exactly. So even if the stock price does nothing, which is why, well, it's dead money. I'm like, oh, okay. The argument that it's gonna be dead money, which it has been for like a year now
Mhm.
plus. I'm like, yeah, that's fine, and I'm fine holding it and buying it, even if it's dead money, because I did an exercise where I looked, okay, projecting out how much cash they're gonna make the following years. How long would it take PayPal to buy back every single outstanding share? And the amount of years is not a lot.
Mhm.
Like before the end of this decade they would have repurchased their whole company, because just
Wow.
like your there's an compounding effect when you invest, like 10% the CAGR per year, like it compounds really quickly. The same goes for repurchasing shares. Like when you reduce the float and you grow
Mhm.
your cash flows to buy back more shares and more shares, like it really compounds quickly. So even if the share price does nothing, in the next few years they're gonna have repurchased all their shares. So I'm not really worried. It's like it's not dead money to me. Like it will move sooner or later. That's what I believe, and it has to, or they're just gonna repurchase their whole business, and that's fine with me too in terms of shareholder return. So I mean, I've never seen something like this where I have seen it in some like slowing like sectors that are like gray and old and legacy, where the companies are like the whole market is like declining, then
Mhm.
you can see instances where the company is priced for zero growth because it is actually zero or it is decelerating. But I've never seen a like large cap tech company be priced this way. Like it's completely insane to me. So I was like, I'm never gonna forgive myself for giving up an opportunity like this. So that's why I made an exception and I own PayPal, and quite a lot of it too. It all go back to the argument like, well, people aren't patient enough for PayPal, and that's fine too. I am. It doesn't have
Mhm.
to like mean that like when you post about PayPal, I don't know if you have done it. That's like the
Mm.
one company people really love to hate on.
Yeah.
Like Arnie gives me so much crap about PayPal. I'm like, but it's funny because I just tell him there are a lot of Palantir bears that
Mhm.
might say like, well, it's just a consultancy or it's just a black box. And I'm telling Arnie, when you talk about PayPal, you're like one of those people. You just don't get it, you know, and that usually quiets him up a bit.
Poor Arnie. We're gonna have to do an episode where we
I
get him
love
on and
Arnie.
we
I
can.
love Arnie.
um, so, do you have a plan in terms? Because what I'm hearing here is that you're seeing PayPal as an obvious choice because of everything that you've just said, but maybe you wouldn't want to necessarily hold it forever. So, I guess you have like
No,
a
no, I
plan in
would. I
place.
would.
You will hold it forever.
Oh, no, no, no. Oh, you mean if it starts moving up, if I'm gonna sell it?
Yeah.
Oh no,
Yeah. When you sell and
I'm
move on.
definitely, yeah, I'm
Hmm.
definitely getting rid of it when the valuation gets closer to its intrinsic value.
Hmm. And that's what
For
you do
sure,
for
it's not
every
one.
position.
No, no, no. There's a huge paradox when you invest based on valuation. So
Hmm.
I don't know if you're familiar with Aswat Damodran, the professor from NYU. He usually goes on CNBC. He's called the Dean of Valuation. He's like the number one valuation professor in the world.
I probably recognize his face more than his name.
Yeah, yeah. They usually get him on to like make sense of valuations in the market, and
Okay.
he's like really good. I recommend him to everyone. Like,
Okay.
he puts up a lot of content. It's all free. He goes on shows. Every single
Amazing.
one is worth listening to. But anyway, there's this huge paradox where he really cares about valuations, and he bought Nvidia in 2018.
Mhm.
And we all know what's been happening to Nvidia lately. It's up a hell of a lot more than 2018. So they get him on CNBC like, is Nvidia cheap, expensive? Is it over or undervalued? He's like, no, oh, it's overvalued. And they're like, so why do you hold it? Like, would you buy it or no? He's like, no, I wouldn't buy it. It's like, but you hold it, yeah. And they ask him
Mhm.
like, but why? Because the theory is that if you hold a stock but you would not buy it,
Mhm.
like it makes no sense because you hold it because you expect return, so you should be willing to purchase it as well at those levels. But that's not the case at all, because past the decisions are made under a specific criteria. uh, New ones are under a completely different scenario, and there are some high quality companies
Mhm.
where I would allow myself to hold it at a premium. Like, of course, if it gets completely ridiculous, I don't mind selling it off. But essentially, I want to buy and hold quality companies. I buy them at reasonable valuations, and then I just hold them. Like, I'm not in no rush. I also get a lot of flack. I was gonna swear. Sorry. I get a lot of flack for I never look at charts or prices of stocks, and people find that like completely insane. Like, what? Did you see the Palantir move today? It's down 10% or it's up 8, or like, no,
Mhm.
I don't look. Like, I look after I value a company, I get a quote, and
Yeah.
then I know like where is it in relation to its valuation, and then I make a decision, and then I wait for the next quarter. I value it again, and then I look. So I really rarely look, and people like, but why? And my question to them is like, yeah, but why do you look? Do
Mhm.
you? I know that you look daily because we spoke about this on Twitter a while ago. I don't know if you remember.
Yeah, I mean, my reasoning for looking primarily is because of content, right? To
Yeah,
explain why
yeah,
something's moved in a
sure.
certain way, and I always try and say, like, it doesn't matter if you are, basically a long-term investor, put short. It doesn't matter, like, these daily moves, but I think it's really important for some people to understand what's affecting the price, because that allows them to control the mind, to think, "Okay, well, this is going down because of this, but this actually doesn't matter in the grand scheme of things. That's why I look. I don't necessarily sit and watch ready for a dip so I can buy, if that
Yeah,
makes
okay.
sense.
You and people like Amit are, of course, exceptions because you are content creators.
Yeah.
Like, it's your job to make sense of price movements, and I just think that they seldomly make sense,
Mhm. Yeah,
unless
they
it's like
often don't.
poorly. But my thing is this: if I look at the stock price today and I see +5%, +10%, -5, -10, am I gonna make a decision based on that?
You'll
More
be a
than
trader, I
likely,
suppose, if you
yeah,
do.
more than likely, I'm not gonna make a decision based on the movement today or tomorrow.
Yeah.
I might look like weekly, or if there is something completely crazy happening, like let's say for CrowdStrike, then I will
Yeah.
hear about it and then I will evaluate that event. But I don't need to look at the stock price to know if there's a like actual material event, because I know that I'm not gonna make a decision to buy or sell
Mm.
based on what the stock price does today or tomorrow. So why should I waste my time looking at the stock price? I can just use that time to look at SEC filings instead. That's my thinking. But I think there's like a dopamine rush kick kind of thing of looking, like seeing your portfolio move up or down, having
Mhm.
huge swings. I think people are like really addicted to that feeling. But I think for my specific investing style, it's just noise. If
Yeah.
there's some material event, of course I don't ignore it, but yeah, I just look quarterly, if that
Mhm.
you know
Yeah,
when
sometimes I
there's a
find it
reason.
interesting. Sometimes I'm just like, "Oh, I wanna check." And, you said there about people check their portfolios. I don't actually check my portfolio very much to see the moves. What I will tend to do is I'll just find myself it's awful, it is, but it's like the social media addiction, I suppose. I'll just find myself looking at the Tesla stock chart, and, like, I completely agree with you. It's just out of habit. Because I'm making these videos, I'm interested in the moves, and I'm looking, I'm like, "Doesn't really matter, but cool, it's gone up or down." But I don't really ever look at it in terms of my portfolio. It's just more, what's going on?
I think I don't know if you use this, but me and my friends on X, we like to joke around. When you start seeing a lot of screenshots of performance start to appear,
Mhm.
it's usually like a top signal. Do you use that at all?
What do you
Like
mean? If I
when when
see
when when people start posting their gains on X,
oh, then it's
like
showing
when you
up
start
we
see
might be at
like
the top.
all these screenshots start appearing, is that like a
Yeah.
sign of the top to you?
Yeah. Yeah, that's true.
Yeah,
It probably does, correlate to that. It works in the opposite direction as well, I suppose.
yeah, I don't pay attention, and the people find it really weird. Like I get a lot of flack for that, and that's fine. I think very rarely will you find someone that invests the way I do, so I just accept it that, well, I'm the odd one out here, and that's fine too. And
No, I think
for,
it's
for
composition.
everyone listening, don't be afraid of having your own investment style, even
Mhm.
though you've not come across anyone else. If it makes you
Absolutely.
comfortable and that's the way you want to do it, and go for it.
Yeah, it's gonna be personalized, and I really don't like it when I see people hit each other down for having their own style and what they're interested in. It's like your money, you decide what you wanna do. What I don't like is
Exactly.
people just basically throwing a dart and picking a company and hoping for the best, because that's not investing to me. But other than that, like, if you've got your reasons and you've done your research, do what you wanna do.
I only have one problem really, and that's when people hate on something which they don't understand. So I get a lot of crap for caring about numbers. Like, why do you care? Tesla is gonna take over the world. Like, why do you care about the number today? I'm like, like they have like
Yeah,
all
that's
these
your style.
like, and people told me like, why do you value Palantir? It's impossible. I'm like, okay, well, why is it impossible? They're like, they might get a government deal tomorrow. I'm like, yeah, you can value that. Like, you can value in expectations. Like, people
Mhm.
talk as if like they have so much confidence when they say something completely wrong, and that's when I like, come on, man, and
Yeah.
when you care about numbers and valuation in a space where not many people do, that's when you see a lot of like misinformed people who
Mhm.
really like to make their voices heard, and you're just like, well, do I answer? Because even if I try to explain it to this individual, will he even care? Like,
Mm.
will he try to like, okay, I see what you say, I'm sorry, I was wrong, or like, is it even worth the effort? So sometimes I have that inner debate with myself, like, do I respond? But then you think of the risk, like, if I don't respond, the risk is that someone else sees it and also thinks that whatever this person is saying is true, and then you're
Mm.
like, oh man. So that's the only thing I hate about social media, where like you have to deal with all kinds of people.
Yeah.
You can't really pick and choose, like, okay, only people who understand this comment, like, there's no such thing, so you just have to deal with it. And yeah,
Yeah, I think as long as
the
people are
only
nice
pet peeve
about
I
it.
have.
Yeah, as long as people are respectful and nice, I think that people should be sharing ideas and people should be, like you said, challenging other people's opinions because that's gonna benefit everyone in the long run. It's
Yeah.
more when people are nasty, I think. But tell us more about your style. Obviously, people have probably learnt by now that you're a numbers guy, you like numbers, you make valuation models, all of these things. But do you wanna just quickly tell us what your strategy is? Like, how do you go about investing? And has it always been like that for you, or have you sort of learned over time and shifted your approach?
Oh, I think if you don't learn over time and never stop learning, then you should just quit investing. If you aren't
Yeah.
like,
Well
if a
said.
year if a year passes and you look back 12 months, like, am I better today than I was 12 months ago? If the answer to that question is no, then you should just stop investing. Like, you never
Yeah.
stop learning. It's a
And you know
famous
what
quote
as
from
well?
Charlie Munger. Yeah.
Yeah, people that are online, whether that's on X, YouTube, Substack, whatever that is, in any form, sharing their information, you see a lot of people hate on people that have changed their opinions and changed their mind as if they should
Oh
never
yeah,
have
yeah,
done
yeah.
that. And it's yeah, like you said, I don't think
Oh,
that's a
yeah,
good
yeah.
thing at all.
I'll give you a prime example. I have like a dedicated group of Palantir investors, like, who think that I'm the biggest Palantir bear. And I will tell you, at one point, 100% of my portfolio was in Palantir, and it was when it
Mhm,
was in the 5 to 8 range, about a year and a half ago. So I valued Palantir, and I realized that we are essentially paying for commercial and getting government for free.
mhm,
And I did some risk assessment within myself and my portfolio. I was like, okay, I am comfortable going 100% all in into Palantir, and that's what I did. 100% of my portfolio was in Palantir, and then it went up to like 16, 17, $18 range, and my valuation was that, well, Palantir is worth $12 to me, so I'm gonna trim. I didn't sell. I trimmed like half the position, let's say, at
okay,
like 20. Like when Palantir first reached 20, like 8 to 20, like I more than doubled my money. I sold half the position, but still, 50% allocation to one company. Some would say that's still like really
I
risky and
agree, yeah,
insane.
mhm,
But I was like, okay, I'm gonna keep half the position, and I got so much crap because Palantir, as you know, is like today it's like 28, 29, around about to reach 30. And the people are like, well, see, you said Palantir was only worth $12. Look now. I'm like, well, our valuation is not static. That's the thing people get wrong. Every time there is a material change or you understand something about the business, like whenever there is a reason to, you need to value the business again. Like, it's not
mhm,
static. Like, it's not like you value Palantir, Tesla, PayPal once and then you
and
just
that's
stick
it
to
for
it
10
for 10
years.
years. Yeah, no, no, no. Like, I need to revalue companies all the time, and that's why it's not a very popular way of investing, because it's really time consuming. Like,
Mhm,
imagine a lot of portfolio managers now, and when people go on CNBC, you will see them talk about pricing, but they will say it's valuation. They will say the P ratio is this, or the price to sales is this, and we think it makes sense to buy here, and they argue with these metrics. These are
mhm,
not references to value of a business. These are references to the price the stock is trading at in relation to their current results, right? So price to sales, like, what's the stock
mhm,
price in relation to your revenue? And those things change a lot. So a PE metric, let's say a P of 20 might be cheap today. Tomorrow it's expensive. Like, it's at the whim of the market, right?
mhm,
Like, what they consider expensive or cheap. But how can you run a portfolio where you need to do valuations, which can take like 80 to 100 hours? Like, even if you have a team of analysts, how can you run a portfolio as a manager of 80 companies where
Yeah.
you constantly revalue business? Like, you
You
can't do
can't.
it.
Yeah.
That's why you need to adopt pricing instead. And I think a large majority of the market only cares about pricing, but they will say it's value. I think only Damoder and the professor I spoke about recently, he likes to differentiate the terms. But yeah, like, those change all the time. Price to sales, price to earnings every quarter, like week to week. Sometimes something can be cheap, expensive. The stock price moves, the PE moves.
Yeah.
A valuation is like, what's the value of the future performance of the company brought back to present value. That's how you value a business. So even without the stock market, I can tell you the value of a company.
Hmm.
And if you price a company, you can't tell me what the stock should be trading at if you don't have like price to sales or price to earnings or pricing metrics to go off by. If there's no stock market, you can't tell me what's the business worth. But I can tell you because I value businesses. So that's like a completely different approach that people don't really dive into or try to understand. So that makes a lot of confusion out there when I share
Hmm.
my content, because people either get it and I have some fantastic discussions, or people just don't get it and it can be a bit frustrating. I forgot the question. I just went on
No,
yapping
it's interesting. I mean,
session.
I have so many questions from that. Um,
Yeah.
I guess
Sorry.
what I was asking you is about your strategy, about your style. Like, what do you do? But
Oh, yeah, yeah,
you
yeah,
kind of explained
yeah.
that.
No,
Do you have
I didn't
anything?
always. You asked if it was always this way.
Yes.
What it's like today?
And how
No.
did you learn?
Well, I have to credit Arnie, a
Okay.
former analyst. He has given me so much pointers, because here's the funny thing about Arnie. I consider him perhaps my best friend in this space.
Oh, that's nice. Shout
He
out to Arnie.
Yeah, shout out to Arnie. And the thing with Arnie, I'm just gonna say this. It might seem like I'm sucking up to him, but I don't. I constantly hate on Arnie's opinions. He hates on mine, but it's like it's healthy, right? But
Yeah.
I'm gonna tell you this: the more you understand about finance, about valuations, about all these things, the more impressive you will find Arnie. I think most people, they don't understand how good Arnie is. It's
Hmm.
like insane. Like, he is really, really top high quality, like world level, world class kind of guy. And that's gonna sound like I'm sucking up to him, but I can tell him to f himself at the same time. He's just that good. And I was like really stagnating in my learning before I came across him, and just
Hmm.
finding someone that you can bounce ideas off of, like, okay, here's how I would approach this. What do you like? What do you think about that? And he can like push back on my ideas, and you go back and forward, and essentially you both grow. And
Hmm.
I started reading a lot of books.
Yep.
I think everyone might be familiar with One Up on Wall Street. It's not really
Hmm.
about valuation, but it's like it's a really good timeless classic for the finance space. And then you go deeper and deeper. I really love reading. I love listening to top super investors whenever they go on podcasts. For example, Dev Kantesaria is a
Hmm.
fund manager that I really, really look up to. He's really great. Whenever he speaks, try to listen, because there's a lot of value in his words, stuff like that. So you just keep learning. Yeah, like, you never stop learning. The Modron, the professor, he puts up a lot of free content out there. If you want to sit through like 100 hours of lessons, he posts his actual classes online.
You
And
have to send me a
he
link.
and on he actually allows you to attend his classes. Like, you will not get the certificate that you've
Yeah.
passed his valuation class, but he will actually like you can email him your assignments. He will like grade them and stuff. Like, he does this all for free. And
Oh,
it's
cool, man.
there are so many resources out there if you want to start learning.
Hmm.
And the more you learn, like, the deeper you're going into the rabbit hole. But no, I was not always this way. Like, as most people, I probably started domestically in Sweden here.
Hmm.
I started to try to identify quality companies.
Yeah.
I quickly realized that you don't really get rich quick overnight. Like it's not like I ever had the intention of buying a crypto coin and then go to bed and wake up a trillionaire. That was not always my goal. I always had some sense of trying to identify a quality business. I might not always have understood what am I paying for that.
Hmm.
Like the more time goes on, the more I start to like care about valuation. There's this famous exercise. I'm gonna mention the modern for the last time. Sorry, everyone. He's really good, but he has this exercise where he talks to top bankers within like equity analysts, and he has this envelope,
Hmm.
and then he puts like $20 inside the envelope, and he asks, "Okay, what would you pay for this?" Like it's just on blank envelope with $20 in it,
People can see
and
that it says 20.
yeah. Like it's
Okay.
$20, and you know there's only $20 there, and
Okay.
the equity analysis says like, well, I would pay something like $18 because I want some profit,
Profit.
like some
Okay.
percentage. Like he's okay, and then he writes like moat on a piece of paper and he puts it on the envelope inside, like, okay, what would you pay for this now? And they're like, okay, now I would pay $21. He's like, okay. He writes AI and puts it in the envelope. Okay, what would you pay for this now? And they're like,
And it
okay,
keeps
I would
creeping
pay
up.
20. Yeah.
Okay.
And the point is, these are all just buzzwords. There's only $20 in the envelope. No matter what he writes and puts
Yeah.
inside the envelope, it's still $20. So whatever you pay above that, you're making a loss. And when
Hmm.
we start to understand that dynamic, that a lot of companies like are not really the high quality business that you expect them to be just because they are part of a trend. Like you need to look
Hmm.
deeper. You need to understand a company deeper and see them for what they really are. uh, for example, we know when this AI craze started, and then you track how often is AI mentioned in earnings calls.
Oh
It's sort
my
of a huge
God.
thing.
It was
Yeah,
crazy.
like it's a typical example. Like everyone wants to be a part of that.
Yeah.
It doesn't make their business worth more unless it's tangible. Like just saying like, yeah, we have some ideas, we're gonna do this, we're gonna merge, maybe we're gonna acquire this company, we're gonna
Just
use
throwing things out there.
yeah. Like
Yeah.
it doesn't add value to the business, but it might to analysts out there who are like, oh my god, they're part of this trend here,
And
up
then we just
their
saw the stock prices do
price,
this.
yeah, you know.
Yeah.
But yeah, you have to be really cautious, and as I mature as an investor, I really try to look on a deeper level.
Yeah. I've got a
uh,
question for you because I think, I mean, I have a lot to learn from you for sure. And this is something that I'm particularly interested in. When you're doing your valuation for, I don't know, any company, I'll use Tesla as an example actually, because this will make the question a little bit easier for me. Let's say you're sitting down, you're valuing Tesla. And obviously, for one of the main reasons that I'm investing is very much what they are working on, how they are shifting. So how do you basically feed into your valuation all the unrealized stuffs? You know, the things that aren't there yet, the things that aren't actually showing here and now, they're coming. Even if you believe that they are coming, how do you feed that in? Because also with Tesla in particular, the stuff that they're working on are also not things that have necessarily been done before. There aren't companies that you can compare it to and feed that in.
yeah,
So how do you go about that?
you have to make it company specific. I can quickly run you through Tesla, because I don't know a lot about Tesla, which is interesting,
Okay.
because Tesla is like a really difficult to value business.
That's what I was thinking.
But I find the less you know, the less bias you have about Tesla,
You could be more
prob
objective for sure.
yeah, the probably better you're like. I've heard the example often that if you just pick a random company, let's take like the Czech Republic stock market, you have no idea about any company, just pick one and try to value it.
Yeah.
Like that's like one of the best exercises when you have no bias, no prior knowledge. And that's what Tesla was for me. So I can quickly run you through my method for Tesla and how I
Okay.
think about valuing it. We might
Me
have to resize. This is
Oh, yeah,
kind of
that's
tiny.
quite small.
Yeah. Okay. So first, I have to collect all the data. So I have this Excel sheet where I compile, like, since they went public and even prior, so
Hmm.
2009 and forwards. And then I compile data for each quarter, and this goes for like 1,000 rows.
That must
Or
take you
well,
so long.
800. Yeah, yeah.
That's
As I
good.
said, I average around 80 to
Yeah.
120 hours. But then when I value it, let tell me if this is still too small.
That's okay for me there.
How about now?
Yeah, I can see that.
Okay. So first of all, we have to understand that Tesla is a company that has multiple business segments.
Yeah.
So what I have to do is I have to value each one
Hmm.
and adjust for that. So I've done, for my main valuation, I only look at the automotive business, the energy business, minus supercharging network, and then
Okay.
services that exclude robotaxi and robotics.
Yeah.
So this is only things that they're doing today. And then I
Hmm.
extrapolate it 10 years. And the way I do this when I have no idea, like, can you tell me like what the solar panel market is in 10 years? Well,
Hmm.
you probably can't. I can't. But there are market projections. So, for example, if we take the automotive one, which everyone is familiar with, there is an EV market projection. I've used the projections by Precedence Research, the firm. And then you have an auto projection just for automotives as a whole. And by looking 10 years ahead for both of those, we can see, okay, how quickly is the EV market growing? How quickly is
Hmm.
the global auto market growing? And then you can look, okay, what's the percentage of EV of the global automotive market? And we can see that by 2033, it's expected that around a third of every vehicle sold is going to be an EV. So then you can start to look like, okay, what's Tesla's current market share of EVs? I can unhide 2023. So this is like, I can just color this different. So we know like this is like what they've already done
Yeah.
for clarity. So this past year, Tesla had a 30% share of the EV market, but only a 2% of the global auto market. And then I try to project what their market share will be rather than just like looking at growing revenues. I try to make sense of it by looking at what the market will do. So I have them losing EV market share,
Hmm.
going from around 30% to 28, because they're, as a larger part of the market will be EV,
Yeah.
there will also be more competitors inevitably. So I
Hmm.
have them losing market share in the EV space, but because the EV space is growing so quickly, they have a larger percent of the total. And then you can just extrapolate that to get the revenue. And I do this for the energy by looking at storage system projections. I do it for services. The only one where I really had to think hard is, how do I value FSD? FSD is going to be huge. If you listen to Elon, he says that if you don't believe that we can solve autonomy, you should
Yeah.
not own
Yeah.
Tesla.
Go away.
It's going to be 5 trillion or 30 trillion if you include robotics. I'm like, if you believe Elon on that, you shouldn't even look at the stock price today. Just go and buy it.
Hmm.
Like
Yeah.
you shouldn't even care about a single data point today if you believe that it's going to be 30 trillion. Like,
Yeah. There's no
it
point.
makes no
You're
sense.
going to make
Yeah,
money. So.
yeah, but I don't do it. So for FSD, I basically look at how many vehicles will they have,
Hmm.
and I do that by assuming a median cost per vehicle. For 2023, it was 45,000 on average. And I keep it the same because we don't know what future lineups are going to look like. We don't know when they come up with a cheaper model, a more expensive model, what the mix is going to be like. We don't know what the economy is going to do,
Yeah.
the
They're due to do
inflation rate.
an affordable model, but who knows when it will be, actually out
Yeah,
there.
so I just kept it at
Yeah.
45K, and then I just do 45K divided by the automotive revenue to get the amount of vehicles. And then I need to make some assumptions. How much is FSD adoption gonna be? So I have, like, you can read figures today of like 15% FSD adoption today. You can read something like 6%, 10. Like,
Yeah.
the sources are all over the place, and Tesla does not report this. But I went with something safe, like 7%, some
Hmm.
median. I have it going up to 27% by 2033. And then you have to monetize this. So if we look at subscriptions, I have them being, let's see here, $99 per
Yeah.
month. Uh, and then you just do times 12 for the yearly numbers. And then I have it increasing from 99 to 399 by the year end. And then you have to consider, okay, how long will I keep my vehicle? And the average today is something around 5 years before
Okay.
consumers will typically change their vehicle. So to get the revenue, uh, I just extrapolate. Let's see, which cell is it? Yeah, here. So I just do it trailing five years, and then by the FSD cost, and that's how I get to my FSD revenue. So I do a lot of this. But
Hmm.
before we just close this out, I have to say the reason I break out automotive, energy, and services, excluding robotaxi and robotics, which people say, well, like, that's the whole reason to own Tesla is when they sold robotics and robotaxi and stuff. I'm like, okay, I want to pay for what's tangible today. And people will say, like, well, you will never own Tesla then. Well, I do own Tesla because it did get undervalued for a period of time. And that's when I bought. So everything they do besides this is
Hmm.
optionality. I get for free. If they solve robotics, if they solve robotaxi, I get that for free. I'm not paying for that. I'm only paying for what I can see them doing today. And I also do something separately where I do look at.
Okay.
I'm gonna zoom in. So I do two valuations. One where I exclude things, and
Hmm.
one where I include. So okay, how do you value robotaxi? It doesn't exist today. We don't know when there will be regulatory changes. We don't know when they're
Hmm.
gonna solve autonomy. So a simple thing you can do is you can look at the ride hailing projections. So what Uber and Lyft do, there is actually a market for this, and there are market projections for 10 years out. So I just look at that, and then same thing, because I don't understand this on a deep level where I can tell you, well, Tesla is going to take over Uber by this year. I
Hmm.
just assign a market share. So for the next 3 years, I have them at 0%. I don't think they're going to solve robotaxi until 27 at the earliest. And even when they do, I only have them doing 3% of the global ride hailing market share, and then only 12% by 2033. This might sound insane because if you listen to Elon on the call the other day, he said that they have instant scale.
Hmm.
People will want to make money using their Teslas. So it means that they're going to scale instantly. The robotaxi network is going to be huge instantly once they solve this. But those are some really risky assumptions to make. Like, if you assign 100% market share, like, it makes no sense. So I'd rather be cautious and have them gradually eating into the ride hailing market over time.
Hmm.
And when I'm given a reason to, or given confidence that, well, they are actually going to grow faster than this, then I just redo the valuation. That's what I mean. Like, this is as
Yeah.
of today. Like, whenever I'm given a reason to, I will change my projections. And the same thing for like robotics. How do I know what the humanoid robot is going to like bring to Tesla? Well, there are global robotics market projections. We know that today, currently, like, Japan is like a majority of that market, and it's not only humanoid robots. I mean, they solve autonomy in
Hmm.
factories. There are all kind of robots. So I have Tesla slowly but surely taking market share. Nothing this year, a tiny portion next year
So
because
sorry, just quick question on that one. So when you say market share of robotics, you're not thinking about Optimus in Tesla factories. Like how that affects Tesla?
No, 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 no.
Okay.
This is like what revenue they're gonna make,
Yeah, yeah.
because
Okay.
otherwise it's just a capital expenditure if they're not making
Mm.
money on it. So it makes no sense to value it as like income. You need to include it here when you look at
Oh,
capital
okay.
expenditures, but when you look at
Mhm.
like taking the market share, I just look at the sales part of it. So
Yeah.
we know that he will slowly start. He mentioned when I did this. This is actually around 2 months old, three. So we didn't have the latest commentary, but he said that well, by 25 we're start slowly gonna start rolling this out to customers. Now it sounds like it's more like 26.
Mhm.
uh, he mentioned that he's been in talks with different manufacturing facilities for where this can be used. So then you just extrapolate. Okay, they're gonna take this much market share. You have to make some educated guesses. Like we will never be precise when making a valuation. We can only strive to be as accurate as we can with the information we have available today. So this is way too short time to go through all the numbers. It's like a cluster F. If you just look at it like this in a
Yeah.
short call with you, but that's just like when you have no idea about these things, you can make some extrapolations from global projections, and then
Mhm.
try to think for yourself. Okay, how much of a market are they going to be? Why will they do that? And
Mhm.
how? Like, how will they reach that? Is it sustainable? Is it reasonable? And things like that. And then, even if they do that, even if you get this amount of revenue from this, you still need to assume some operating margins, like how much
Yeah.
cash are they actually going to be making. So there's a lot of assumptions you need to make here, and luckily there are a lot of markets out there. There are a lot of companies where you can learn from. To understand Tesla, I had to look at like 20 different companies. Like, for example, for services,
Mhm.
uh, I don't know how much money you make when you offer spare parts for a vehicle. I don't know how much it costs to repair a vehicle. But luckily, there are a lot of companies that do exactly that.
Yeah.
So you can look and you can try to like, okay, well, we know that Tesla has like a really, like they have an edge in manufacturing, so we can assume that they are slightly more efficient than the typical auto
Yeah. That'd
builder.
be a fair assumption.
Yeah, so you have to do a lot of thinking when you value a company. It's not like, well, the revenue is going to grow at 30%
Mhm.
and that's it. Like the cash flows
Yeah.
are going to grow at 15% per year. Like, if you can't tell me why, if you can't point to a number and explain it to me, then you don't
Mhm.
have a valuation. You have a like financial engineering. Like, you just put whatever numbers you want, and it will not help you be a better investor. Like, you need to be able to explain every number in your valuation, or else it makes no sense. Like, how are you gonna
Mhm.
be confident about the decision you make from the output of your valuation if you don't even know why the number is there? Like, if you don't understand the logic that makes up your valuation, or the story attached to it. Like for Tesla, you need to do a lot of storytelling. Like,
Mhm.
okay, well, they're gonna do this in this space by, like, you need to be able to explain that, or else you don't have a valuation. You have a excel exercise, you could say.
Yeah, wow, that was really interesting. Thanks for explaining that. It's
Yeah,
I
I
guess
know
so I
it's
guess
gonna be like hard. I'm not good at
no, you
like
did a great job on that. I think like I said before, I don't think a lot
specific
of people are
examples.
sharing this information. So, well, it's interesting to me, and I do think the viewers will find it interesting as well. How much do you allow, let's say, macro factors to come into your
Oh, zero.
valuation? Your 0,
No,
okay.
no. Look, we have presidential elections, we have
Everything
ongoing
always.
wars, we have risk at wars.
Yeah.
There is an input I use when I value companies, and it's the risk-free rate.
Mhm.
The risk-free rate tells me everything I need to know about the macro. Like the 10-year yield will always price in the market expectations for all of these things. So why should I waste my time like following each and every event, try to imagine, okay, if that happens, how
What
will
if?
this
What if?
affect
Yeah.
the dollar? How will this affect the election? How will Trump being president affect the rate cuts? Like, I could waste my time doing that, but I'm not going to be a better investor. So instead, I just use the market implications by using the risk-free rate. Like the
Hmm.
risk-free rate is already telling me what I should expect, and when it changes, like when there's a new reality, like if the yield goes from 4.2% to 3%, I just update my valuation. I have the market expectations like in my valuation always,
Hmm.
so I never care or spend my time on it. I might do it out of personal interest, but not like
Yeah,
to do a better
actually,
valuation.
yeah,
Like
yeah.
I do care who becomes president in the US because I think it has broader implications for my daily
Of
life.
course, like
But
personally, yeah.
yeah,
Investing aside,
but
yeah,
not
yeah,
like to make a better valuation, because it's I already have it, the implications of whatever is going on in the risk-free rate.
yeah,
So yeah,
makes sense. Well, I see that we're just over the hour mark, so I'll wrap up shortly. But I just got two quick questions more for you, and I'd love to do another episode if you're up for it. I've got so many more questions for
I
you.
would love to yap more. Sorry,
Cool. We'll set that up.
I'll try to prepare more and be
No,
more
no.
coherent. Yeah.
No, you've been great. You've just, as we've gone on, like you've just made me think of loads more questions that I want to ask you. So we'll do another video together, and I'll
Sure.
fire some more questions at you. I've got a lot to learn, like I said, from you. But let me ask you these two questions to end off today. The first
Yes.
one is, put simply, I want to basically ask you, how often do you trim positions, and what triggers that decision?
Uh, this is funny. I had this conversation with some close investing friends recently, and
Hmm.
I'm really uncomfortable because this year I made a lot of gains.
Hmm.
And that makes me really uncomfortable because when there's a lot already in the market, you see a lot of opportunities. You want to do a lot, but
Yeah.
when it's so green, you get more nervous. You're like, man, this is difficult. Do I
Should I?
trim? Will
Shouldn't?
I
Yeah.
regret it? But no, it I can essentially rely on two things. One
Hmm.
is if the business is high quality enough and it's not completely unreasonable priced in comparison to my valuation, then I do nothing. Like
Okay.
my goal is to do nothing essentially for the
Yeah.
next 50 years, like let my kids
Yeah. Yeah.
inherit my wealth. Like my goal is to do nothing, but I did trim, for example, I did trim Palantir
Yeah. You
because
mentioned.
it just got so stretched from my valuation, and then the next time I valued it, it was undervalued again. And then you think like, oh, I'm such an idiot for trimming Palantir. But no, at the time, because I didn't understand these different dynamics that I
Mhm.
understand now, I made a decision. And it doesn't mean that I made a mistake
Yeah.
or that I would take it back. It's just like if it gets too far away from what I see the intrinsic value being,
Mm.
then I might trim. Selling out completely out of a quality company because it's getting too expensive. I've never done that. I hope I never have to. And your
Mhm.
camera went out. I don't know if
Yeah, I
I'm.
think it's overheated. I'm still here. Let's just continue. We'll power through. I don't know
Yeah,
what's
yeah,
going on
yeah.
with
Okay, okay.
it.
Yeah, so basically, I don't do a lot of selling. So I'm still, if I'm a beginner at something, it's selling out of positions. My goal is to do such good buys that I never have to sell anything. But yeah, if it gets way too ridiculous, then I might. Yeah.
Mhm. Makes sense. Makes sense. Okay. Last question, more of a, I suppose, a non-invest, well, investing related, but more of a personal question. Your daughter, super, super cute, by the way. Every picture that you put up, I'm
Thank
just
you.
like, oh, she's adorable. But I was wondering, what would you most like her to understand about investing or personal finance in general as she starts obviously getting a little bit older? Is there anything that you really want to make sure you teach her?
Um, it would be great if she has a passion for investing. If she
Mhm.
doesn't, I would never force it onto
Of
her. I
course.
would never force her to try to understand something. I might have explained like the dynamics of wealth creation. I think it's
Mhm.
important to have some sort of general knowledge about wealth creation, and stock market and the economics in general. So I will always try to impart that onto her. In regards to the stock market and investing, if she shows some passion for it, I'm more than happy to try I'm not very pedagogical. Is that how we pronounce
Mhm.
it? Pedagogical. Yeah.
I have no idea.
Basically, I'm not a good teacher, is what I'm trying to
Oh,
say.
okay.
So if she has the patience and she has passion, I will more than gladly try to tell her from the basics and up. But I will always impart some general knowledge and
Mhm.
make sure that she at least owns an index or something like that.
Yeah,
At the very least.
that's a good answer. I just noticed your jumper, by the way. It's taken me all this time to notice the big flag on your arm.
Yeah, this is like really old Henry Lloyd one. I have a few pieces from them, and I thought since you're British, I'm
It's
gonna bring
fitting,
out
yeah,
the.
fitting.
Is this like the Union Jack or what is it called? This
Yeah,
flag.
Union Jack, and you've got the Palantir cap as well, so I like it.
Yeah,
You're
yeah.
you're right on
Nice.
brand there for the channel.
Yeah, yeah, yeah.
Cool. So we'll leave it there. That's for me, that was super interesting. Like I said, if you want, I'd love to have you back on and we can chat some more and dive into to everything a little bit deeper. But like I mentioned earlier as well, I'm going to leave all of your links to your YouTube channel, which I really want to encourage you to keep posting. I think you're doing a fantastic job, and I think honestly you have so much value. So please keep posting if you can, if you want to, because I definitely think that's worth it. And obviously your
Yes.
X account as well. I'll leave that linked below.
Thank you so much. And whoever is watching, if you want to leave me some bad comments, please do. I have
Don't
too
ask
much
for that.
positivity going on my channel. So, but yeah, if you want like 30, 40-minute videos of valuation talk or looking at charts, I really
Mhm.
like to visualize data, because looking at a number and correlating it to a different number can be difficult. So I like to post a lot of charts on X and on YouTube. Then check it out if it's for you. Maybe not. Yeah.
Absolutely. They'll all be linked below. But thank you again, Amir, for your time. Really appreciate it. And thank you, everyone, for listening.
Thank you, everyone, and thank you, Hayley.